Hey everyone, and welcome back to Money Journey. Today we are diving deep into one of my largest personal investments, a stock that's been on an absolute roller coaster, Alibaba. Now, if you have held Baba over the last few years, you know the pain. It felt brutal, but despite being up around 60% in the last year, it's still down over 60% from its all-time highs back in 2021. So, the big question is, does this massive discount represent the investment opportunity of a lifetime? In this video, I'm breaking down exactly why I believe pessimism might be the reason why this opportunity appeared for investors. We'll explore the headwinds China has faced, why I think its economy still has incredible potential, and most importantly, why Alibaba itself is a world-class business with durable competitive advantage, poised to benefit massively long-term. Stick around. Alright, let's be real. Alibaba hasn't been cheap without a reason. For the past few years, investing in China has felt like swimming against the current. The Chinese economy, while still growing, has faced significant headwinds. Growth slowed down from its historical breakneck pace. Then there was the regulatory crackdown, shaking investors' confidence, particularly highlighted by the government actions concerning Jack Ma and Ant Group. And hovering over everything has been the persistent real estate crisis, a sector that represents a huge chunk of China's GDP. Developers defaulted, construction stalled, and prices fell, creating ripple effects to the economy. These factors combined painted a picture of uncertainty, leading many international investors to pull back and causing valuations for great companies like Alibaba to compress significantly. So, despite those headwinds, why am I still so bullish on Alibaba the business? At its core, Alibaba is a technology powerhouse, most known for its dominant e-commerce platforms Taobao and Tmall, which creates a massive network effect. Buyers attract sellers and sellers attract buyers. But it's so much more. They have a sprawling ecosystem. Alibaba Cloud is a major player, especially within China. Their logistics network, Cainiao, is incredibly sophisticated and they are deeply integrated into digital payments. They have scale, cutting-edge technology, particularly investing heavily in AI, and a strong brand. Crucially, their international e-commerce segments are growing rapidly. These aren't just features, they are deep competitive moats that make Alibaba incredibly difficult to displace in its core markets. And they are in the Chinese market. The potential is huge. Big growth in their middle class, more people getting rich, which leads to higher consumer, which means more revenues and profits for Alibaba. We have talked about Alibaba's business model, their competitive advantages, their headwinds that Alibaba has been facing the last few years that create this compelling opportunity. But let's look into the fundamentals of this company. There are plenty of good reasons to be bullish on Alibaba. For example, looking at our money journal checklist, it's all check marks. Look into it. They are starting their recovery, so their fundamentals are starting to looking very interesting. They have been growing around 17%. Bear in mind, after COVID and in 2022, 2023, that was a lot of problems in China. Their real estate crisis create consumers to step back and not invest because a lot of Chinese people were invested in the real estate, and with valuations going down, they feel poor. So they start to going back and not consume as much as they used to. So the consumer was in a recession, I would say. But Alibaba continued to grow their revenue, even though 2020 they only grow around 1.8%, but still they resume growth and they have been growing around 8%, so which is very good. It shows that Alibaba is a very resilient business model. In terms of margin, really good margins. Their gross margins are going down, but I expect them in the future with the recovery in Chinese economy to going up slightly to previous gross margin that they have before, but still 38%. Free cash flow margin last year were 16%, which is very good. But if you look to the average of the last 6-7 years, it was 21% free cash flow margin. And right now they are investing a lot in AI in their cloud business, so that's why their free cash flow margins are lower. So I really believe in the future Alibaba can resume growth, increase margin, so we can have free cash flow margin around 20%, which is incredible. In terms of debt, their balance sheet is incredible. They have more money in short-term investment than their long-term debt. They have $62 billion in cash and short-term investment, and the long-term debt under $30 billion, which is incredible. They have net profit, I would say, if you subtract the debt into their cash in hand of 32 billion, which is incredible. Returns on equity and non-invest are going up, recovering above 10% right now. So this is very good news for Alibaba. So I do believe they can returns on the invested capital around 15%. Let's look into it. Their net income is down in these last few years, so that's why their returns on invested capital is slightly lower than their average, but still very good, about 10%, which is always what you want to see, or at least a return on invested capital above their WACC. In terms of moat and competitive advantage, you have to pay a premium for this company, their network effect, their technology. It is a very diversified business. They are leaders in a lot of sectors. You could compare directly to Amazon and their incredible moat. Alibaba should be like the Amazon of China, and you should pay a premium like into the US. You are already seen this TV show on the US and how Amazon is successful, so I expect the same for Alibaba in the future. And China is growing more or above the US, so I'm a lot bullish, not only on Alibaba business but in the Chinese economy as well. They have been free cash flow positive and they are returning capital to the shareholder. One thing I love to see, the last few years since the beginning of 2022 until now, we had this great opportunity. Alibaba is trading under $100 for a long time, so this creates the opportunity for investors to accumulate shares, increase their position by buying a very good position. And I was one of that investor. Of course, I was not buying Alibaba above 200 or 300 shares, $300 per share, because right now, right on that time, it was a lot of optimism. I might be undervalued, not the risk reward might not be very good at that time, but at the cheap valuation, it get me very interested. And I really love it. It is a great company on a really great economy. Of course, there are a lot of risk on investing in a communist country, for example, and you have to take that into your mind, because you have to, the risk reward have to be higher. For example, and my discount rate for Alibaba is very high. I will show in the next few minutes, but there are more risks, or it's riskier to invest in China than, for example, in the US. But they are returning a lot of capital to the shareholder. During this time where we see low valuations, they bought back a lot of shares. In 2023, they bought back 3.1% of the company. 2024, 3.6%. In the fiscal year of 2025, they already bought 4.1% of the company. And we have seen an increase on the share price, and they are not doing as much as buybacks, which is very good, seeing a management that sees the price or the valuation going up and they are not buying back as much shares, because buying backs, in my opinion, should be done when you have when the company is undervalued or are trading at a cheaper valuation. And they start the dividend. It's not big, I would say. It's around 1%, but they are sharing or distributing their profit to the shareholders, which is very good, and they are investing in their company, so they have plenty of cash to do that, to invest in their business, to distribute to the shareholders, and that's what investors like to see, and this creates shareholder value. That's one of the reasons I'm so bullish on Alibaba, especially when you see valuations or the stock price trading under $180. That's where it was the range where I started my position, and when the stock was going down, I was increasing my position. And look, right now, look into it, Alibaba under $80, $70. It looked like a really great opportunity to create a very good position. In terms of valuation, bear in mind it is a Chinese company, plenty of risks to invest. But before looking into it, they have been growing, still growing, and they are expected to continue to grow. Gross margin going down, which we don't like, but we know the headwinds that they have been facing. Return on invested capital going down, but they are recovering right now. Shares outstanding going down, I mean, and free cash flow per share recovering. And with this recovery on the Chinese economy, Alibaba recovering their margins, their profits will increase, and I'm expecting free cash flow per share to recover and going up, and we see maximums for their free cash flow per share. That's what I expect in the future. So in terms of valuation, it is a Chinese company, so there are some country risks. In terms of business risk, I would say it's pretty low, so it is a great company business model. So there are low risks in terms of business. So for this assumption, my discount rate for my base case is 13%. For a US company, if I want to invest in Amazon, it will be 9 or 10%. But to invest in Alibaba, for example, I want a higher return. So that's why I have a bigger margin of safety in this discount rate. They have been buying back around 3% of the company and paying a dividend of 1%. And for my base case, I will assume 18% free cash flow margins. I do believe they can have higher, but I think that I'm being conservative here, so I think they can do 18% free cash flow margin, especially in the future with their cloud growth and AI, which is higher margins. In terms of growth, I mean, China is growing very fast, so I am expecting Alibaba, which is a very mature business, to grow slightly above their GDP. So I'm expecting them to grow for the next 10 years around 8 to 6%. In terms of PE, they deserve a slightly premium. I'm not assuming a 20p, even though it could be. For Amazon, it will be like a 25, I would say, but 18% trying to be conservative here. And then I'll put a bull case and a bear case, which is a more optimistic case, a slightly or bearish case, I would say. So with these assumptions, I came with an intrinsic value of $134 per share. Right now, the stock is trading $120, so slightly under my fair value. I'll say there are some margins of safety, and right now, I have a very big position. I'm not interested in snapping more shares at this valuation. Of course, I was buying at a lower valuation. Right now, it is a big position. So, but do you think Alibaba is still cheap? I would say yes. It's still below their fair value or my intrinsic value. I would say it's. So, wrapping it all up, Alibaba has been a painful hold, no doubt. The macro headwinds from China's economy, regulation, and the property sector were real and created the discount we saw. However, China remains an economic powerhouse with immense future potential in key global growth sectors. And within China, Alibaba stands out as a premier company with a vast ecosystem, technological leadership, and strong competitive advantage. While risk remains, the combination of a world-class business trading at what I believe is a significant discount to its intrinsic values presents a compelling, potentially lifetime opportunity for patient, long-term investors. That's why it remains one of my biggest positions. What do you think about Baba stock? Let me know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into investment opportunities. Thanks for watching, and I will see you in the next video. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.